Washington House Republicans delayed the rollout of their tax bill late on Tuesday, in a sign of early trouble for what party leaders had hoped would be a quick victory. The bill, which had been scheduled for release on Wednesday, was delayed until Thursday, as Republicans struggled with the daunting arithmetic of drastically cutting tax rates without alienating key constituencies by eliminating popular tax breaks. After a day of negotiations on Capitol Hill and confusion across Washington, the House's chief tax writer acknowledged the delay but vowed to stay on track with an ambitious plan to pass a bill through the chamber by Thanksgiving. In consultation with President Trump and our leadership team, we have decided to release the bill text on Thursday, the tax writer, Representative Kevin Brady, Republican of Texas and the chairman of the House Ways and Means Committee, said in a statement. We are pleased with the progress we are making, and we remain on schedule to take action and approve a bill at our committee beginning next week. Even if the delay does not throw the Republican schedule off course, it signals potential difficulties ahead for a bill that Republicans are attempting to pass on a party line basis, over what appear most likely to be loud objections from some business groups and relentless criticism from Democrats. When one party tries to rush through a bill of this significance that was drafted in secret without a single public hearing, you can expect outcomes like this, said Representative Richard E. Neal of Massachusetts, the top Democrat on the Ways and Means Committee. Republicans should slow down, work through the regular legislative order and do this right, not fast. As Republicans rush to lock down support from their members and key interest groups earlier on Tuesday, some new details of the bill began to trickle out. Speaker Paul D. Ryan, Republican of Wisconsin, told conservative groups on Tuesday afternoon that the draft bill would cut the top corporate tax rate to 20% immediately, and not phase it in over a period of years, as had been discussed, according to a meeting attendee. Mr. Ryan also said that the plan would include a higher rate for the wealthiest earners, which would be above the 35% that Republicans have identified as their top tax rate in the framework released in September. He did not indicate whether the wealthiest would continue to pay the current top rate of 39.6% or if it would be higher or lower. Attendees were also told by Mr. Ryan that Republicans would phase in a full repeal of the estate tax over several years. The House bill will include a worldwide minimum tax on multinational corporations' profits, two people with knowledge of the drafting said, in an effort to prevent companies from shifting money abroad as the United States transitions to a so-called territorial tax system, which would subject only income earned domestically to the American corporate tax rate. The tax would be on all global income, and not on a country-by-country basis, as some companies had feared. Republican leaders also confirmed they would maintain a federal tax deduction for at least some state and local property taxes paid, while eliminating comparable deductions for income and sales taxes.